you think about building a bootstrap business, the importance of it in your journey, and then how you look at capital raising now that you've raised a significant amount of capital.
Look, raising money is an obligation, not an achievement. Let me tell you, our 50 lakhs were given to us how? 5 lakhs, go buy furniture. Okay, 5 lakhs, you have to pay a vendor, come and take another 5 lakhs. Take another 5 lakhs. That's how it worked. It
Very
wasn't a
different
cool
from
startup like you've gone and raised your millions of dollars. It doesn't work like that in our time. If you don't need the money, don't raise the money, right? If you raise the money, understand it's not your money, right? And you need to make good and give a return on that money. And the other thing we strongly believe is that goodwill matters more than money. I mean, the goodwill matters more than money for me is the number one pillar. Money will come and go, your goodwill will stay for life.
Yeah.
You know, I think I've told you in the past, revenue is vanity, right? Profit is sanity and cash is reality, right?
Here we go.
Good afternoon, everyone, and welcome to the Jify Connect. Today, I have the pleasure of hosting Rushabh Vora, the co-founder of SILA, a leading facilities management and real estate platform in India. Rushabh, thank you so much for coming on our show. We're really excited to learn about your entrepreneurial journey, but also to really learn about how you've managed in such a manpower-heavy sector where employee management and employee benefits is at the fulcrum of your business success. So we will dive into that through this podcast, but before we do that, I would love to learn a little bit about you from you, and where your entrepreneurial journey began, what motivated you to become a founder, and what keeps you motivated a decade on.
Thanks for having me, and you and the Jify team. So yeah, I mean, we run a pretty labor-intensive or people-intensive business. How I started as an entrepreneur, very frankly, was by chance, to be very honest. I was working in finance, and I was studied in the US, was working in finance in Singapore. Hated Singapore, to be honest, hated my job. My brother was in the US, had moved back to India and had raised a little bit of money to start a business to sell CCTV cameras actually. And he then, said, listen, why don't you come here, help me start this business up. I moved back. We both started this in April 2010. If I was maybe doing finance in the US, I may have not come back and started that. I think it was circumstances that led to it, and that's how I started. But once I got in, I don't think there's been any looking back.
That's awesome. I didn't actually know that you all started with CCTV cameras. How did you all move from that to facility management?
So I think the first contract we got was to install CCTV cameras, and then we started in 2010 when raising money, startups, angel funding, investing was not as institutionalized as it is today. So for us, any business was good business. So the person we sold CCTV cameras to told Sahil, who's my brother, listen, why don't you put security guards at the place, manage the man guarding. And then we said, okay, we'll also do your cleaning. And then we started in that way. And then over the years, we obviously don't do camera integration anymore, or system surveillance integration. And we slowly started out and built out facility management from there, but that's where it started.
Interesting. So obviously your entrepreneurial journey has had many pivotal moments, right? Which have led from CCTV cameras to facility management, from facility management to real estate as a platform where you all do advisory, construction, full-blown project delivery. How, what has actually been some highlights of these, of this journey which has resulted in you all entering one space and expanding to the other, right? And just expanding your portfolio across the board with, something that is common at the core.
See, the dream or the goal was always, I would say, 2 to 3 years in, we kind of understood or had a high level vision that we want to build out a real estate platform. When I say a platform that has capabilities to operate and build real estate, to develop, which means not only construct but be a developer, have development capability.
Okay.
And the last piece is to efficiently allocate capital in real estate, right? So we always thought, and that was the dream, and we started out with building the operations, then slowly we went on to do development, capital allocation, etc. We've not got into as yet. I don't know if we'll get there also, but I think the whole plan, we see a lot of merit in having the ability to do all three. A lot of the large real estate platforms, global ones, they obviously had access to capital, so they've been allocating capital, then built development ability, and then operations. We didn't have access to the money, so we obviously started the other way around.
With FM?
With FM, then we started with FM in 2010, really 2010, 2011. We then, in 2014-15, started doing some project management, where we understood how buildings were operated or managed post-construction. Then we got understanding how buildings are built with the project management business. We then built on that layer of advisory, where we now understand how the capital flows, how diligence is done, how investors or asset owners look at valuing and going about investing in real estate. So, and then we started doing development in 2019-20, when we saw an opportunity to go to the next step.
But then really at the core of it all was the fact that you all had this network of the real estate arms and the real estate developers with whom you're already working in some level, and then kind of that commonality touched upon every new...
Look, I think our business today, so I break it up, and we break this up into two to give it. We have a services arm, which has a separate cap table group of investors and a life cycle, a very different life cycle from our other arm, which is our development business, where we have again a separate group of investors, rather one, but and that'll have it's a very different business with a different capital structure, different life cycle, completely different businesses. The first business which is facility management, really got us started off. In the beginning, we obviously leveraged our network. We've been lucky to be brought up in Bombay and know people, leverage the network. But that was only in a few cases to get the start.
The foot in
right?
the door,
The foot in the door. Developers, even today, make up sub 10% of our revenue. Right? So the way we've obviously over time evolved and we've de-risked, and I think every company has... risk management becomes more and more important in different ways for a company at different sizes. But today, developers are not a big part of our business. They were initially slightly bigger part of our business in terms of the customer profile, but our focus has never been on working with developers. Really. We do work with them; they're big customers, but that's not something that really helped us start off.
And you mentioned that when you all started this business, you all started with facility management because at that point in time, you all didn't have the capital to probably get into the full-blown real estate piece of the business, right? But you all also started in a sector that was highly competitive and, if I may say so, more commoditized than most, right? Where there were incumbents, traditional players that existed. How have you all managed to, what gave you all the conviction that you all will have a gap to fill in this industry? And then secondly, what do you think you all got right? Because at the end of the day, you all have been able to create a very high quality pan-India brand when many others have kind of, stuck to regional plays or, local plays, so to say.
Look, I'll answer this for myself. I don't know if my brother had any other conviction, but frankly, when we were there in 2011, 12, 13, losing was not an option, right? For me and for us, I think we didn't want to lose, I think, and B, more importantly, financially, we could not afford to lose, where me and Sahil were at that point of time. So did we go and size out the market? Today, if you ask me, the market size, addressable market for facility management is massive, right? Every manufacturing plant, every high-end residential project, every commercial building, every tech park, every mall, every airport, every retail store is our customer, potential. Schools, hospitals, all of that, right? Did I size that out earlier? No. So when we started out, frankly, it was take it one contract at a time. Whatever's giving you revenue and profit, take it in, hustle, and get to that basic critical mass, right? Over time, the conviction came in that, as we did it for 2 or 3 years, we realized two things. One is that the market size is just huge, as I said. Second thing is there are a lot of international players, very well settled and very good companies, come here, set up, doing a great job. But there was just a handful of good Indian operators with solid governance standards.
Yeah.
And that could run, look at tech, be a little more forward thinking and progressive. And there's some very good Indian companies too. But we saw an opportunity saying that if there's such a big pie, there's space for everyone. If you do this well, you can actually take on a big chunk of that pie.
Yeah.
So I think, to answer your question, the pie is just so big, and we were just a little more progressive, I think, than the rest. And the other thing is the talent that we hired early on.
Yeah.
Again, not by design only, also by chance.
Yeah.
Right? We ended up hiring talent that is not typically from the facility management background early on. Today we have great professionals from our industry work with us, great team members, all of that. But the top 3, 4, 5 people that we hired early on came from very diverse backgrounds.
Yeah.
So we actually looked at this business with a slightly different lens.
Okay.
Right? Then, go poach the guy from, my competitor X, Y, Z, these big international property consultants and stuff. We didn't do that, right?
Yeah.
So I think that's what worked, because we hired people of a similar culture and a background, and we were able to build early on, partly by design, partly by luck, a culture that is progressive and very honest, and integrity has played a big part, and a very relationship driven culture. So I think that was what's worked for us.
So I'm going to probe a little bit about talent as we progress, but before we get there, I want to kind of step back to your journey, right, and your entire founding journey, to understand a little bit more about some of the struggles that you all had, right? What were some of the challenges? When did shit hit the roof, and what were your options, and how did you all think about navigating them?
Look, I think the first challenge that frankly Sahil had and I didn't have was before I moved back. We started on April 1st, 2010. I think it took him from December to Feb to go to 30 uncles and get them to convince them to give them 50 lakhs. For him 50 lakhs, when it was a very different way of raising money earlier. So I think the challenges at every stage are different. Early raising money, that little bit, and that too, let me tell you, our 50 lakhs were given to us how? 5 lakhs, go buy furniture. Okay, 5 lakhs, you have to pay a vendor, come and take another 5 lakhs, take another 5 lakhs. That's how it worked. It
Very
wasn't a cool startup like you've gone and raised your millions of dollars. It doesn't work like that in our time. We really had to, we were accountable for every rupee. That's how we raised our money. So it was challenging. Now, come to, I think when you say challenges, you have challenges at every stage. We typically break this up into a few the stages of the company. I think going from 0 to 30, and I'm just going to put a scale of, let's say I'm putting a scale of 1,000 or 2,000, right? Going from 0 to 30 has its own set of challenges, right? You're way more hands-on, you have to hustle, business development is very hard, achieving that critical mass is hard, especially in a B2B business, right? Building a team is hard, all of those, I mean, any startup founder has those challenges, right? But I think the challenge is there, and then the challenges from 30 to 100 are very different. Even the time taken, in my opinion, 0 to 30 in my opinion is as hard as 30 to 100, right? This is the way I break it up, right? Challenges change, where here next you have to build teams, set processes, start really looking at your MIS numbers more, HR starts becoming a lot more important, people management and all of that stuff, because you're trying to take one step back at some level, right? 100 to 500 then, in my opinion, takes again the same amount of time or effort. The challenge number one there is you need to evolve. What got you here is not going to get you there. So you as a leader, as a team member, need to understand that you will not have the skill set. The skill set you had to apply from 0 to 30 comes naturally with hustle. 30 to 100 again comes naturally, little less naturally, but still there. 100 to 500 you need to change with time, and your team needs to change with time. I think that was one massive learning. And now as we have gone from 500 to and hoping to go to towards the 2000 number, it's it's again hiring good talent. Risk management has become very important, right? Compliance is the most boring part of anyone's life, but you realize the importance of compliance now, importance of managing risk, and I think now we're starting to do all of that stuff, right? And systems, processes, and all of that stuff. So I think challenges are very different at every stage. It's not one size fits all, and every industry probably has different challenges.
Anything that you would go back and say that I wish I did this differently, or ventured into this particular space, or approached this solution differently, or even like something to do with your own personal leadership style that you would have changed differently in your journey so far?
I think, look, everyone learns the best lesson, the best teacher is a mistake, right? And you learn from your lessons. I think we could have not, we lost 2 years of our lives in 2015-16 trying to be tech entrepreneurs, right? We said, hey, we've gone hired whatever, how many, 100, 300, 500,000 people running a business, but our valuation is still, whatever, 30 crores or whatever it was at the time, basis a multiple of profit. And look at some of these other big startups going 100 million in the papers, this, that, all this stuff. So we said, listen, we're doing facility management in office, let's do it in homes. It's happening in America. Handy.com has raised hundreds of millions of dollars. This one has raised this. So we got a little swayed. And it was not that hard in 2015 to raise money. 1 week we ended up raising $1 million, and we tried to do a consumer play. The mistake we made is we're not consumer entrepreneurs. Me and Sahil don't know how to burn money. We're two good Jews who like seeing profit, right? We are not, I don't think we are tech entrepreneurs. We don't understand technology. And to be honest, that business was a services business, not a tech business, right? So we got swayed with what was going around. We course corrected very fast, actually.
I remember that.
It's 6 months. We course corrected. We actually went back to our investors, said, listen, here's your money back at a 18% IRR or flip into SILA, right? We don't want to make anyone lose money. We did that, but we lost in starting, getting excited, course correcting. I think we lost 2.5 years of focus on our core business.
Really?
Which is fine. I mean, in the large scheme of things, I think we lost 2.5 years there. So if I had to do this again, obviously that's one mistake we would have ideally not made.
Avoided. Okay. Awesome. My last question around this is like, look, I know you said that you all raised a small amount of money when you all started SILA, but for most part you all are bootstrapped, right? Like you all have largely been bootstrapped. You haven't raised institutional funding early on in your journey. And I know you have a view on the whole institutional fundraising process, but would love to understand, especially for people listening into this podcast, how you think about building a bootstrap business, the importance of it in your journey, and then how you look at capital raising now that you've raised significant amount of capital from large institutions like Norwest, right? So how has your thoughts on it evolved?
Look, raising money is an obligation, not an achievement. Number one, right? I think that's something that we have always felt. Okay, Sahil and I have always felt because of maybe the way we've grown up and our days. And the other thing we strongly believe is that goodwill matters more than money, right? Two things for us have been, there's obviously other pillars, but these are the goodwill matters more than money for me is the number one pillar. Money will come and go, your goodwill will stay for life. That connects to raising money, right? So if you don't need the money, don't raise the money, right? If you raise the money, understand it's not your money, right? And you need to make good and give a return on that money. We didn't need to raise money in a business that we were in. We raised that 50 lakhs from a developer in Bombay who took a chunk of our business. But if you ask me, we are indebted to him for life. Right? He gave us a check when we were 23 and 25. He gave us office space. And he taught us how to grind hard to, hustle and he gave us that initial start, right? Then over the years, in terms of, we whenever we needed, we would raise bank financing, and there's efficient ways of raising money. We were already quite diluted, so we had to do that. And then came on Novest in 2019, where they gave an exit to that developer. It was just a secondary, right? To be honest, when we took on Novest money, right, frankly, it's again, you've just taken on one more obligation, and you have 7, 8 years, and you need to make them an exit, right? So I think it's more of a burden, to be very honest, because we are already the angel had already made a lot of money. But so I think that's the way we've looked at it. That's my view. I often go to Bangalore and everyone comes and tells me, and friends go, "Oh, dude, he's raised so much. Oh, dude, he's raised so much. He's so good." I'm like, boss, he's freaking raised money. He's not built a business, or she's not built a business. So I think it's great. It's a skill to raise money. A lot of good guys, consumer entrepreneurs and B2C entrepreneurs who've done a damn good job. Our just way of thinking is slightly different. The approach is more conservative. Build a fundamental business. Prove yourself. Then the money will follow.
Well, thanks so much for sharing your views on the whole capital raising process. I think is a lot for people out there to learn, especially those who don't necessarily get access to capital very easily. I want to just jump back a little bit because I kind of missed asking this earlier. One of the things that people track quite closely in their 0 to 30, 30 to 100 and 100 and on is what are the metrics in a business that are actually very relevant to track, and how have they evolved through each stage, right? And how do you recognize that as well?
So I think this is a good question because they are very different in each stage. Let's take 0 to 30, right? You're at that point of time tracking revenue a lot more when it comes to financials. When it comes to customers, you're tracking customer acquisition, how many you can get in the door, all of that stuff. From 30 to 100, that goes down from revenue to gross profit towards EBITDA type, and again stays on the P&L, right? And then customers, you're talking about retention, renewal of contracts, adding customers, your pipeline management for us at least started to get a lot more institutionalized. Again, we didn't know how to do it. We had an external consultant come and help us with setting our whole sales process together, which has worked like magic.
There was an external person who actually came in to do that.
Yeah. We didn't know. You got to know what you don't know. Right? And someone has to tell you, you got to know what you don't know. And in this case, we were happy to be told that we didn't know what we were doing. And it changed. So I think the way we looked at customers, the pipeline, acquisition of customers, and the focus started becoming through the P&L. Right? 100 onwards, you start, and cash flow is obviously important in those, very important in those first 0 to 100, because you don't have access to cash flows, bank financing, etc. You're tight, you're bootstrapped, all of that stuff. As the journey goes on, cash is still king, right? But you get access to a lot of that, but you need to start looking more at your balance sheet. Right, your returns, your return on equity, your ROCE, you need to, the balance sheet start becoming a lot more important from 100 onwards. We started looking at that maybe post 500 as carefully as we do. The metrics on the business side, risks, as I spoke about earlier, risk management becomes super important, super important. Can't even, very important. And then customer retention. Right, customer retention, NPS, which is your promoter scores of your customers, and then very important in our business is we have something called an ESAT in terms of employee satisfaction, employee attrition. That kind of stuff starts becoming more and more important. So I think it's also very important to understand what metrics you want to track at each stage of your journey. In general, right, like I think I've told you in the past, revenue is vanity. Right, profit is sanity, and cash is reality. Right, that kicks in over time, and you got to be cognizant that at some point you got to start seeing cash.
Interesting. Obviously, tech first companies go through a very different evolution.
Very different.
But I think eventually the metrics of monitoring your balance sheet, your returns, etc., is what becomes relevant, right? Especially for those that go on to list their businesses and get the valuations.
And there are a lot of loss-making tech companies abroad and still doing well. So I don't know better. So I can't comment about all these guys have built billions of dollars of business. I mean, $1 billion businesses. There are a bunch of these guys in India. Unicorn. Now I go to Bangalore, I heard a new term called Sunicorn. All their stuff, I don't know better. They're all great companies. I think we are that fundamental dhanda business. So I think we understand that.
Got it. Awesome. So I'm going to switch tracks a little bit. Like I said earlier, I would love to learn a little bit about how you all have managed your people strategy. Especially when you started early on, the founders tend to play the role of the CPO pretty much. There's no real like HR head that's managing your people problems, right? So would love to kind of understand a little bit about how you've gone about building the team, what you've looked for in talent, what has worked for you to create a culture where people actually stay, right? I know that SILA has a very high retention, especially at your corporate office level. Some of your senior guys have been with you since inception, which is a long time. What did you all get right there, and what was your role as a CPO, if I may say so?
So I tell you, the people strategy again goes into 0, 30, 100 onwards for me, right? First hire we had made, for example, we hired people, we looked at the textbook, we said we need someone for marketing, someone for this, someone for that, and we went and hired around. A person we had for marketing, I guess he was, took 8 days to design our business card. We could have done that in 2 hours, and we realized that, and it was a learning, but whatever. Earlier it was very hands-on, the people strategy. You're hiring everyone, you're trying to just convince people to come work for you. Firstly, for us to convince people to come and work in a cleaning and a security business is any case hard enough from outside the industry, because it is not, let's put it, it's not the sexiest business to be in, right? So I think that was the challenge early on. Then as we grew, right, we got good people from our industry at the managerial level, and we gave a lot of growth, right? For example, my head of compliance, the person who deals with Jify, actually with you all as well, Gopal, he came to be a security guard, right? At that time I was interviewing everyone, and I said that he had Excel skills, and I said, listen, you know what, for whatever 10,000 rupees we can actually hire someone, and I taught him payroll, and I made him start running payroll instead of being a guard. Today he heads compliance, payroll, documentation at SILA. He's grown, multifold, and done really well, and he's gone through classes. So earlier we were very hands-on. The strategy was to identify people at a few levels, or as many levels as we could, to give them that growth and show them that journey. Over time, we have tried to hire culture first. I think now that's what I do, right? If I go through an interview, and everyone you hire is not going to be of your culture, right? But we try, at least in the senior management team, hire culture first. Now, when I break culture, I break them into 2 pieces, right? Culture doesn't mean they need to be like you, right? Don't need to dress like you, walk like you, talk like you. Culture, break it into 2 pieces. One is ethics, values, and ethics, values, transparency, etc. Second is, are they like you, or like the larger group, or are the average? But if they check the first box, right, can you mold them into your system? And your system needs to be more open to absorbing people from a different background, etc. Right? So I think if they fit bill number 1 and are saying they're signing up to be in a progressive company, signing up to be in a company where we are aggressive, we're not a brand, we're not a big global brand, so we need to compete with the big boys, we need to think out of the box on how to acquire business or how to acquire good talent, fit that culture, then and kind of can fit in here. That's check number 1, right? Second is ability and IQ and all of that stuff. So for me, EQ over IQ any day of the week.
Interesting.
Any day of the week, right? At one point of time, we used to keep saying, we need high IQ people, we need high IQ people. I actually think there's a fine line between high IQ and EQ in my business and the services business. You're a hardworking guy, good EQ, fits our culture, reasonable IQ. Today that's what I would look for. So that's kind of how we hired up until maybe 4-5 years ago. Now we're growing in various cities, various geographies, and we've also got to understand what culture fits us, but also fits the kind of customer we are servicing, right? The type of customer we're servicing in North India is very different from the type of customer we're servicing in South India, for example, right? So we've got to understand that we cannot put someone from South India who's not going to be comfortable and thrive in North India. Culturally, we're all different. Bombay, very different. So I think now even that is starting to play a role, at least hiring at the mid-level. But yeah, I mean, generally, try and hiring is very hard. And if you ask me, you give me a golden swan and say, listen, if there's one superpower you can have, I'll tell you what is, just drop great people to me when I want, in whatever way, shape, form I want, and that'll be the best thing we can do. But it's very hard to get right.
Have you, as you all have scaled to become a fairly large organization, have you all had people fill in the roles of like CHROs or chief people officers? And do you think that there's a fine balance or a fine friction between founders and people who come into this role? Like what have been some challenges that you faced with people who come to do this for you? And it's not just about the talent acquisition piece, right? It's also talent management, retention, happiness, etc.
Yeah. So look, I'll tell you firstly, between Sahil and I, he handles HR, and I handle the business and finance and this and that. But you know what? We actually have not had a senior CHRO at SILA yet. Maybe this will be right, wrong, I don't know. But we have. What we've done is we've hired someone, and the person that, the team that oversees it today have not worked at TCS or some of the large companies for 30, 40 years and come on, right? We have a team of 3 or 4 young, guys, girls, who understand the way SILA works, understand the industry. 1 or 2 of them have come from the industry. And understand who's going to survive at SILA, who will thrive at SILA, who won't thrive at SILA. And it's not like a good person may be great at company X but may not work at SILA. So we've kind of hired a team of people today. I don't know if it's the right strategy or not, but we don't have a CHRO with a lot of experience. What we've done instead of that is we lean on consultants a lot. Okay. And early on, until I met the person who helped out with sales, I thought consultants, I know you're ex-Bain, but just will give you one model and this and that. Obviously, we can't afford Bain and the big companies. But I really believe it's great to get an eye from outside. Early on, we had an HR consultant who helped us, and they came and told us, listen guys, you all are too nice, you're awarding mediocrity. You don't let go of anyone. Right, you try, if they're not doing well, you fit them elsewhere, right? So you're not letting go, and you're doing disservice to them, their growth, and to you. We started realizing that, and then we started letting go of people and in a nice way. Then we have an HR consultant, again another one that has helped us with something else right now. Sales consultant, we have people on finance. So I think wherever which again may not be the right answer for everyone, but it seems to be working for us right now. We've got good young people, good EQ, good IQ, progressive, and then where we need to learn what we don't know, we get that help from outside, from consultants. And that's really worked for us.
That's worked for us.
Again, in finance, it didn't work for us, and we have a solid CFO now. And that system of mine broke last year, in all honesty, right? And we migrated from one Tally to a Oracle ERP, and frankly we were not good enough to handle a ERP. We got someone in, really brought a lot of semblance and learned a lot over there. So it doesn't work for all divisions. But that's kind of how we've done it. So
why haven't you all gone down the route of having like a CHR or CPO kind of take this off your plate?
Look, I think people is too core to our business and is too core to any business, right? I'm not saying the CHRO is that they're very good at it, right? I think Sahil is very passionate about HR. Okay, to be honest. Even if I tell him not to do it, he'll end up doing it, I'll be honest. So sometimes good, bad, but he loves it and he's good at it.
So that's
right?
Good,
it's good. He's got a good team. We've got a good team. So I don't think we've needed, we've had someone else in that, we've tried to hire in that role. The person was great, but probably, she moved on for a reason. But we don't see the need for it right now. We may need it.
Yeah.
But right now we've said, okay, given where we are at, use an external consultant to help us who's superb and does a good job.
Why did, just moving kind of from the corporate office piece to the blue collar or the frontline workforce, that's a whole different ball game, right? So managing people over there is like day in and day out of your business, and also retaining people in this industry at the workforce level is extremely hard. Anything that you all think that has helped you all over the years, or initiatives that you think is core to you all as a business or a company that allows people to stay on for longer? What is is there?
Look, there's a natural attrition rate in our industry.
Yeah.
I think we are about 200 basis points better than that. I don't know if what we do is better than the rest or all of that stuff, but I'll tell you simply what we've done, right? We hired 25,000 people at the front line today. Okay. We pay people on time. We pay all their compliances. For 99% of the time, whatever we commit to them, they're paid, because obviously we're hiring so many people a month. Some person in Orissa or someone will go commit something else, and that's not. But for the most part, the intent is clean.
Yeah.
Right. We don't have a single union at SILA, at a company level, etc. Because it's simple. Yeah, people come to work. You're providing that employment.
Yeah.
Pay people, pay well, and then we have digitized processes to give pay slips, etc., which give them clarity on how much they're getting paid, and we're trying to respect every job, whether electrician, plumber, engineer, whatever it is, right? Cleaner, all of that stuff. That's one. Second thing that we've done is, I think, one thing that also kind of drives us is, which I never thought about until maybe 6 months ago, when a friend of mine, 3 months ago, when a friend of mine told me, he's like, boss, think about what you're doing. You're providing 25,000 jobs.
Yeah.
Right. And that is going to become 50 and 1 lakh. And, think about what you're doing. And I actually thought about, we also have a foundation, right, which is one of the few companies, I think the only company that I know of in our space, Indian company competing with us at least. We are a registered foundation where we pay for the education of children, of our janitors, kid, daughter, son, electrician, plumbers, daughter, son, and we pay for education. So after they finish a year with us, 25%, 2 years, 50%, and this stuff we don't get some CSR from. This is paid out of our P&L, right? So we are funding and trying to make sure that the electrician's daughter can actually be an engineer, right? So we're trying to do that, trying to give back as much as we can. That's helped us a bit with attrition. And obviously then, we have in terms of managing HR and managing them, once the intent is right, once your systems are right to pay well, pay people, then you obviously need to have strong IR capabilities. IR is HR, industrial relations. Okay. So there we have someone senior who's come from a big MNC. We have someone in Maharashtra who's good with handling people, and we're just checking in. We have the helplines, we have all of that stuff. So do we see attrition? Yes, it's natural at that salary bracket, but is it less than the rest? Yes. Are we trying to do everything we can to take care of people? Yes. 90% of our employees that we hire come through referrals.
Wow. That's a
large
percentage.
At one point of time, it was 95%. I don't have the exact number, but today my best guess will be between 85 and 93, 94%.
That's a large percentage.
Yeah, through referrals, through our referral program. We hire a lot of people through that. We onboard, last month in Bangalore, we hired 1,200 people, October 1st start, right? So that's the scale at which we're hiring,
My last question before we close with a quick rapid fire. If you had to give a piece of advice to anyone starting up in the FM real estate sector at large, what would you share about this space, and what are your views on the opportunities that exist in this space for the next few years?
Look, firstly, real estate development and facility management, completely different businesses, right? Completely separate ball game. If someone's starting out in development, don't take advice from us because we're starting out, right? We're four, 5 projects in. Sahil's running it. He's starting it out. Yeah, so I mean, I can give you advice or
Yeah.
give an entrepreneur. So number one, be nimble. Nothing is going to work to plan. You will make a business plan early on, which is great. It gives you some direction and a path,
Yeah.
but then you got to be very nimble. Like we started with cameras, then we did security, then we can't security, we did facility management, now this, now that. So I think you got to be nimble and see where the opportunity lies and not be fixated to a plan. You cannot be a perfectionist.
Yeah.
Right? You got to let some slack go. That's one. Second thing, you gotta at every level try and make yourself as dispensable as possible, right? So that means build the right team, process, structure. Easier said than done. I think I have not done a good job of it in the last 6 months, personally, right? But we've got to try and do that.
Yeah.
And make yourself dispensable so that everyone grows across. I think that's the
Yeah.
second learning. And the third learning is, look, yeah, you will fall down 100 times during the journey. You will make a lot of mistakes. You just gotta have that grit that, boss, you're not gonna lose, right? And you need to be smart. You don't need to be stubborn about it.
Yeah.
But I think that is required because you will have 100 obstacles along the way, which today will look big. In the larger scheme of things, right, they won't look that big, right? So that's 3. Then my college squash coach, who's kind of a mentor for Sahil and I, has written a book, and it's called Run to the Raw, right? I think this is the one thing that we've learned, right? When a lions hunt in packs, all right, and he says this story all the time and it'll always stick. Lions hunt in packs, and it's typically the female lion that is the most agile and that hunts, right? And when they hunt, you'll have the male lion actually raw, right? And what happens is the prey will run away from the raw. And when they hunt, the females are all in a circle, and the male will roar from one side. So what typically happens is the male gives the big roar, and then the prey actually runs into the trap.
Yeah.
The story is run to the roar means run and solve the problem, right?
Yeah.
So go to the problem. Don't be scared of the problem, right? Because the only way to solve the problem is going and addressing it.
Yeah.
So I think that's something. You don't be scared. You'll have a lot of obstacles and a lot of mistakes you'll make, and just run to the raw.
That's great advice, actually, and a story I haven't heard before. So thanks for sharing that, Rushabh. And now we will start our rapid fire to close today's podcast. Please be quick to answer. You don't get time to think.
Sure.
Are you ready?
Yeah.
Okay. Favorite way to unwind after work?
Sport.
The best career advice you've received?
Goodwill matters more than money.
If you had a superpower, what would it be?
I think I said earlier, snap my fingers and get access to the best talent around.
Maintaining work-life balance, a myth, a choice, impossible, a challenge?
I think it depends on which stage of life you're in. Very possible.
Very possible. Okay. The one quality that you won't compromise on when you interview a new candidate?
Culture. Straight up, like culture.
Okay. And one piece of advice to new entrepreneurs?
The attitude should be losing is not an option. That's it.
Awesome. Thank you so much, Rush, for coming on our podcast and sharing your journey with us. And I'm sure people are going to find this extremely informative, but also learn a lot from it.
Cool. Thanks for having me, and best of luck. See you.